Morning, welcome to a new week. It's Ainsley News. Today in gold we trust, and the printers go brrrr yet again. In Gold We Trust by Incrementum report is arguably the preeminent annual report on gold and silver, read by over 2 million people in 2020. Whilst we're still over 2 months away from the release, they have given us a teaser, the chart pack. We'll go over these charts with our own commentary over this week. First, much of what drives the forecast of gold and silver, and indeed the whole financial space now, is the extraordinary extent of both debt and monetary stimulus, the latter further inflating the former. For timely context, they took the following quotes from Wall Street Journal article titled, "Welcome to the Era of Non-Stop Stimulus." But with President-elect Joe Biden now making it clear that the recent $900 billion stimulus will at best only be a down payment, and the now $3.3 trillion of total stimulus spending is just the beginning, it sounds like America is headed into a program of permanent stimulus. How does it end? The Treasury debt already set to reach 108% of GDP, and Fed assets to finance that debt already 7.8 times the pre-crisis level in 2008. It isn't a question of if the government is going to run out of other people's money, but when. This chart I'm going to show you puts this government debt and deficits into perspective. Analysts often talk about the drag effect carrying so much debt creates. When looking at it, remember the cost of servicing that debt is a key contributor to the deficits currently experienced. Whilst relatively minor to the huge fiscal spending currently deployed, way above receipts, hence the deficit, remember that this is at zero interest rates. You can see why the Fed cannot let rates rise whilst there's so much debt to be serviced. Here's this first chart here. Further coronavirus stimulus and Green New Deal in preparation. And that increase there as we move towards and anticipate 2028. To put the extent of the current over-indebtedness into perspective, just check out the following chart we're going to show you, illustrating the relentless march upwards since the turn of the century, and particularly that of corporates as they debt fund share buybacks and other price stimulative tricks amongst near zero rate debt opportunities. This chart here in times of structural over-indebtedness. And to facilitate all that cheap debt, we can thank none other than the world's central banks. This next chart we're going to show is one of the most staggering in the financial world. It illustrates the magnitude of the quantitative easing unleashed by the West's three biggest central banks, dwarfing any GFC response, and also in no way finished. Check out that steep rise here in 2020 to 2021. Wow. US money supply measured by M1 took 80 years up to 1993 to reach $1 trillion from the creation of the US Fed in 1913, and only really heating up when we left the gold standard in 1971. From 1993 it took another 19 years for the next $1 trillion, thanks to a quick surge with QE1 after the GFC, and that heralded the start of QE. As you can see in this next chart, it took just 4 years for the next $1 trillion, 4.75 years, and then 2020 and COVID saw things blow out to just 4 months and 7 months consecutively. If this next chart below is not a blow-off parabolic curve, I don't know what is. Here's that chart here. Smashing through the $6th trillion in just 7 months. And will the 7th trillion come even faster? And yet, as we know too well, all that money did not find its way to Main Street. It purely enriched Wall Street with that aforementioned access to cheap capital, whilst unemployment and stagnant wages for those employed held back Main Street. This next chart we're going to show starkly illustrates the simplistic difference now between new money and actual new cash in circulation. This chart here, are Americans becoming richer, or is it just about the money supply? I'll let you be the judge there. Fundamentally, this all comes down to the debasement of the USD and fiat currencies all around the world in general. A fiat currency is one backed by nothing, or nothing more than the promise of a government. Without the forced fiscal discipline of gold standard requires, a government can expand its supply by simply printing more money. Governments love being re-elected and living large now at the cost of future or currently non-voting people, or at least votes beyond their care factor. The parabolic chart above shown is not atypical of how this has always played out over millennia. We greedy humans just can't help ourselves, and so the fiat cycle repeats. There's just one form of money, real money, that has survived and indeed thrived in this cycle: gold. And if we so measure the value of the world's preeminent Western currencies since we left the gold standard against gold, you can see that they're heading to zero. Here's this chart here showing the erosion of purchasing power. Wow. And so whilst gold has languished since August, this is largely due to the illusion that everything is awesome and that somehow, the weight of all that debt will somehow disappear. And the central banks will oddly allow bond yields to keep rising, and that somehow servicing all that debt on higher interest rates will be okay. The reality of maths says otherwise. We will discuss this further in coming podcasts and articles, but we'll leave you with the performance of gold and silver since the turn of the century across a range of currencies, including our own Aussie dollar. One can look at the year-to-date performance as an omen of more falls to come, ignoring all that above that we've shown you, or a dip buying opportunity before things get very serious. This from Herbert Hoover. Blessed are the young, for they shall inherit the national debt. Here's some charts here we're going to show you. So a golden year for every currency, back to the year 2000 up to 2021. And then we'll throw you straight in here for silver had a tremendous 2020. But we'll also look back to the year 2000 there so you can see those returns. Great stuff there. We'll have some more charts for you in the coming days, of course, and more news. Enjoy your first day of the week, everyone. Remember ainslieybullion.com.au for all things physical, ainsliewealth.com.au for all things cryptocurrency, and goldsilverstandard.com for our own cryptocurrency built and backed by real gold and real silver. I'll catch you tomorrow for more news.